Alright, so I'm going to just talk about some other key things that I've noticed in exams that people need to work on a little bit. I'm calling this video Monday because it's Monday. So first of all, unemployment and participation, that link between unemployment and participation is really critical. Okay, being able to articulate, don't always just refer to directly off the, and try and rely directly off the ratios. It's more about your ability to apply your understanding of what happens when unemployment or participation increases or decreases. So for example, some key things, let's say for the first one we have an increase in employment. So that just means more people have a job. That doesn't necessarily mean less unemployment because there might be more people overall in the labour force. So you can have an increase in the amount of people with a job, but also an increase in the amount of people that don't have a job or that are looking for work if the size of the labour force is increased. On the flip side, you could have a decrease in employment, so less people with a physical job. That doesn't necessarily mean there's more unemployment. So for example, if Australia had a natural disaster, which a lot of people passed away, employment would probably go down because we don't have as many people physically, but there could be less unemployment as well because none of those people are unemployed either. If a lot of people are retiring, employment would go down. Unemployment would probably go down as well because there'd be less competition for jobs. So make sure you've got examples there for the both of those. In terms of the next two, when there's an increase in unemployment, this is more the impact on participation. When unemployment goes up, okay, technically that doesn't affect the ratio directly, but what can happen is that less people might become discouraged, so participation rates will generally go down. So when unemployment goes up, participation generally goes down, and when employment rates go up or when unemployment goes down, that generally leads to an increase in participation because people feel confident about their ability to get a job going forward, which will lead to a decrease in unemployment. An increase in participation. So higher unemployment generally leads to less participation. Decreased unemployment generally leads to more participation. In terms of the impact of participation on unemployment, so this one's unemployment, the impact on participation. The next one's the participation's impact on unemployment. When participation increases, more people are part of the labour force, that should lead to, potentially can lead to more unemployment in the short term because more people are physically looking for work. But in the long term, and this is the key thing with immigration, this is directly related to immigration. It can also be linked to any tax reforms, welfare reforms, anything that's designed to boost participation. In the long term, there are three key benefits. It leads to lower wages. It leads to increased productivity, and that's two key benefits. And then that leads to lower production costs, which makes firms more willing to supply. That can lead to more employment because firms are physically more willing to supply, so they need more labour. And secondly, it also makes us more internationally competitive because it keeps cost of production down. Both of those things are really key things to talk about in that case. When there's a decrease in participation, so for example, if you get asked how an ageing population might impact employment, theoretically it can lead to less unemployment in the short term because there's less competition for jobs. So for example, if a lot of people are retiring, those that are in the workforce might swoop and take those jobs, and therefore unemployment goes down. The issues is more the long term. The issue is that in the long term we might experience higher wage pressures, lower productivity, higher costs of production. All of those things make firms less willing to supply and also hurt our international competitiveness, which can lead to more job losses in the long term. Okay, that relationship, go back, have a look at them if you're not quite understanding them there. Are key things there. So, for example, the question in the CPUP exam, the unemployment rate remained at 5.4% over the relevant time period because the participation rate increased from 65.5 to 65.7%. This means that new jobs created were taken up by new entrants to the labour force, so unemployment rate didn't go down despite increased employment because the size of the labour force has now increased. On a separate note, this is a different question, just on the same slide. In terms of real wage growth in Australia, real wage growth has been very close to 0%. Okay, essentially what's happening is nominal wages are going up by around 2.1%, and inflation's around 2.1%, so again they're around the same, which means that real wages, after adjusting for inflation, are close to zero. Do not say that real wages are going up by around 2%. That would be relatively quick real wage growth. Real wage growth is slow and basically non-existent because inflation and nominal wages are going up by the same ratio. Alright, in terms of possible budget questions, I'm trying to anticipate the 8-mark question, so when you get it on your exam, you're like, alright, this is something I'm ready for, this is something I'm going to score really well on. So I've gone back and had a look at the budget papers, and these are some things that I think they might focus on in the 8-mark question. So firstly, in terms of the overall conditions of the economy, we're in our 27th year of consecutive growth. Business conditions are actually at the best level they've been since the global financial crisis overall. and 1,000 jobs were created last year on average per day, and global growth is as fast as it's been in 6 years. So there's a lot of strength in terms of growth, a lot of strength in terms of employment, a lot of good things about what's going on in the economy at the moment. But in terms of possible budget questions, the three key things they focused on in the budget papers was how we're living within our means, how the budget's promoting investment, and how it's also guaranteeing essential services. So there are three things that I think they might focus on. So hypothetically, you might get an 8-mark question that says, explain how this year's budget is going to promote investment spending while also ensuring that Australia, is living within our means. Or another way for that, well, what living within our means really means is not spending too much money. We're still focused on fiscal consolidation going forward. So in terms of the promoting investment element, you've got to focus on policies that are designed to achieve that. So there are 4 key things we've done. There's all the infrastructure spending as a form of investment, the lower company tax rates, and they have been passed for all businesses earning less than $50 million per year. The tax rate is down to 27.5%. The accelerated depreciation allowances encourage investment in new assets. You could talk about tax concessions, although that's more of a supply side thing and you want to keep it a little bit demand focused. And then there's the 7-year tax plan, which is also providing tax relief to consumers. That can be linked to sole proprietors investing or non-incorporated businesses as well. So there are things you could focus on. There's probably 4 marks worth of stuff there you could link about how the government is promoting investment. From a living within our means perspective, you've got things like increasing welfare integrity. So making it harder for those who've committed indictable offences to get welfare, making sure that they've got the data matching in place so that people aren't claiming more welfare than they should. There's a clear path to surplus, so make that really clear. Talk more broadly about living within our means. So they've provided a clear path to surplus. They're limiting their payments or their expenditure. They're making multinationals pay more tax. And they're also tackling the black economy by limiting cash transactions to less than $10,000 and things like that. So really focus on key things about living within our means. If it's the last 2 budgets, you can focus on things like HECS and things like that as well. In terms of guaranteeing essential services, this isn't something we spent as much money on, but things like the Gonski Review is ensuring that everyone's getting access to basic education, so $24.5 billion of funding there. There's been new funding towards hospitals. They've been ensuring that they're going to fund the National Disability Insurance Scheme. So additionally, they were going to use the Medicare levy to fund that, but they've found other ways to try and fund disability care, which is another way they're trying to provide essential services. If you get a general question like last year's budget that asks you how demand policies are working to boost jobs and growth, here's the approach that I want you to take. So it's important that you don't just jump straight into deliberate policies. So if it is an 8-mark question about how aggregate demand policies are boosting jobs and growth, firstly, it's got to be budgetary and monetary. And secondly, do not talk about supply chain policies. You should not have anywhere in your answer anything about education or anything about infrastructure. You can focus on the demand side of it, but don't talk about the supply side. It should be focused on the main demand policies. So in terms of what I'd be looking at for this answer is 2 marks about the stance of budgetary policy. Focus on the fact that it is a mildly contractionary budget. However, that's just given due to automatic stabilisers and the cyclical component of the budget. Having said that, this budget is sort of relaxing that commitment towards fiscal consolidation. They're willing to give back some of the gains from the economy over the last few years because of cyclical factors. So make it really clear that the deliberate policies are mainly expansionary. In terms of deliberate policies, there's heaps you can talk about. Company taxes, income taxes, accelerated depreciation allowances are probably the main ones for demand. Infrastructure spending can all be linked there. And then 4 marks for monetary policy. Explain the stance of monetary policy. We've kept it at an expansionary 1.5%. It's well below the target, the neutral range. Focus on how the transmission mechanisms promote jobs and growth. And then perhaps some link to the fact that there has been some issues with deleveraging and the banks not passing them on, and the fact that commercial interest rates have actually increased this year as a negative for jobs and growth. If you get a question about demand policies, none of this stuff, R&D, nothing on education, nothing on subsidies, you will score poorly if you include any of that kind of stuff. If you get a question on why long-term unemployment, it's unlikely because it's not directly in the study guide, but basically the main cause of long-term unemployment has been structural changes. So the idea of the Australian economy restructuring, moving away from car manufacturing, which can cause long-term structural unemployment. And the reason for that is that there are some jobs that are becoming redundant, and then that might continue to occur in the future with like driverless cars replacing truck drivers and things like that, where people don't have the skills required to get a new job, and therefore there's a lack of they don't have the skills at the moment, which could lead to long-term unemployment because they need retraining in other areas where we have comparative advantage. All right, here's another question from the 2016 exam. This is probably the one that stood out to me from the 16 exam that's going to trip people up if it comes up again. You may get asked a question about referring to a particular market, explain how the government intervenes. So this question asks you for one factor influencing the market and then the extent to which it operates freely, which may be tweaked in the new study guide to just say how the government intervenes. Good ones to talk about is cars. You could talk about high cost of production for the car industry as your factor, and then your government intervention could be taxes and subsidies. You could talk about how tariffs and subsidies, and how they've been reduced in recent years. You could focus on how there's laws related to safety, so you've got to have airbags and things like that. They're all forms of government intervention in that market. The one I've focused on here is the cigarette market. I think this is Zoe's answer, so in fact Zoe's focused on this. But things like the emergence of cigarette substitutes like hookah and e-cigarettes have shifted the demand curve for the left because now there's less demand because we can substitute into other viable alternatives which still give you that sort of nicotine fix. And then in terms of government intervention, because they have negative externalities, so smoking damages the welfare of others, that can lead to problems in the form of excise taxes. This leads to government intervention in the form of excise taxes. So that shifts the supply curve to the left and makes suppliers less willing and able to supply. Other things they do besides excise taxes, just if you're talking about excise taxes, make sure you link it to the consumption going down because of the higher prices. Other things, the quit campaigns and negative advertising is another example of trying to reduce smoking. So they've got the quit campaigns that no Gary no and all that kind of stuff. Negative advertising on TV. You've also got grotesque images on the on cigarette packaging. You can't smoke in public places. You can't smoke if you're under 18. All these types of intervention are trying to reduce the market failure that occurs in this market. So a clear thing, if you do get a question on how government intervention in a market, don't talk about Uber. Okay, Uber's more about when you're linking to efficiency within a market. It's very hard to link it to government intervention. We didn't talk about it much. It's not that relevant. All right, last thing for this video, there was a question in the Insight paper that asked you to explain the impact that a decline in capital expenditure or investment expenditure can have on the budget and Australian living standards. When you get a question like that, capital expenditure is basically spending by businesses on new equipment, new machinery, new infrastructure. And the key thing with that is that all that stuff creates jobs. So the collapse in private sector business investment, and it has gone up again recently, but non-mining investment is stronger, but the end of the investment phase of the mining boom hurt aggregate demand and economic growth. There was lower levels of aggregate demand because it leads to less employment because we don't need people to build stuff, so we don't need engineers and builders, etc., etc. Therefore, the automatic stabilisers automatically would cause the budget to have more outlays and less tax revenue. So, for example, the lack of investment spending could cause a downturn in the economy due to weaker levels of aggregate demand. This could lead to increased unemployment, which then flows on to less personal income tax and more welfare from the government or more people on New Start allowance. So injections rise relative to leakages. So on the budget, it has a negative impact because of the impact on employment. The combined fall in leakages and increase in injections should help to improve the business cycle, but it's likely to increase the size of the budget deficit. In terms of material living standards, again, you can link this mainly through employment. So this occurs because the decline in investment is likely to lead to lower aggregate demand and slower rates of growth. This should lead to less household incomes for households because there's less demand for workers, reducing real GDP per capita. It may lead to growth growing slower than population. It could lead to high levels of unemployment, which reduces non-material living standards as well because more people are likely to experience stress and anxiety and therefore depletes their non-material living standards as well. You could focus this question on the long-term impacts of capital investment. So in the long term, we could be less productive. That could lead to higher prices and hurt purchasing power. It could also make us less internationally competitive, which could have negative impacts for the budget because of less jobs and also have negative implications for material living standards. So that's another way to approach that. We'll talk about this in the next video. Thank you.